Hello YouTubers, welcome to the Independent Investor for Tuesday, May the 6th. It's been over a week since I put a video out as I continue to struggle with this market. The economic data coming out is actually quite a bit worse than the 2009 financial crisis. And a lot of it is equivalent to what you would see in the Great Depression. But at the same time, the markets have continued to rally. So it's been a bit of a confusing time for me. But I don't really fight the market. I have some understanding of why the market is going up. It's basically to do with, as I've mentioned in previous videos, the Federal Reserve printing money. So now on the fiscal side, which is government in the US, there's been about roughly $3 trillion in announced spending. We know checks went out for $1,200 for each American. And I've shown the Federal Reserve balance sheet. I won't do that again today. But it is now also up $3 trillion. So putting those together, you have almost $6 trillion of money that's been created, and we can see that in the M1, M2 money supply just going vertical, and we can see on the Fed balance sheet it's just gone vertical. So that money has to go somewhere, and it's flowing, some of that is flowing into the stock market. So I've dug around and have been able to find a few more plays. I closed out a few of my short positions. I'll put them in the notes, but basically VRSN, CSGP, TECH, and DXCM. I did take a loss, small loss on those four, and I might short them again in the future, but I always try to limit my losses, admit I'm wrong, and move on. And to show where the money flow is going, a lot of it's going back. In the last couple of videos, I think I've shown the retracement, like on the Wilshire, the S&P, and the NASDAQ. The retracement, 100% retracement is with the stock when the market goes from the bottom and returns back to where it was at the high. So that's 100% retracement. And the NASDAQ at the time was about 60%, the S&P was about 50%, and the Russell was like 35 or 40. That continues today. So it's been a lot of the technology. So what I thought would be interesting to make my own index up with just the FANGs in there. So what I did using eSignal, which I use for my technical analysis, you can see it's basically, I put Facebook in there, Amazon in there, Google in there, and Netflix, which kind of make up the FANGs. Some people have different definitions of that, but if you look on the daily chart, we've so this is a combination of those, just a mathematical formula of those stock prices all added up. So we can see here we had the correction, which was like close to 20% from 4,300 down to 3,200, and we've rallied all the way back and actually made new highs. So as I've said, the market's very narrow, and so the rallies are deceiving. When you look at the indexes, you're seeing these strong gains each day, but most of it's just being made up by a few stocks. And there's other sections of the economy that are still battered. The airline industry, hotels, and oil, of course. So that kind of what threw me off, but, well, not totally, but at least I have a pretty good understanding of that now. So I think going forward, I'm going to hopefully be able to keep some of the long positions I just took on, which I'll get to shortly. But the big thing now is as people get back to work, and the news is always spun in a way, even if it's negative, it seems to be spun in a way that will help the market kind of go up. But I think the big test is going to be as countries around the world and more people go back to work, whether there's a second wave of this virus. And then if there is, then the market will definitely probably roll over and go to new lows. But again, I'm not fighting that. I one or two videos ago, I talked about the ROIC, relative change, and that has came back above 0. It never did get to -20, which I said is you want to see it go below -20 and back up above -20 for kind of a buy signal. And what I've done recently as far as the trades, and I talked about Centerra Gold, which is I think CG on the Toronto. Its earnings, I said in I think a previous video that I was going to sell it out on the Thursday because their earnings came out on a Friday, and it had a pretty good run. It was up about 25%. So I did that. I sold it out, and the earnings came out on Friday. As I expected, they weren't that good because of the restrictions for the workers. It was the COVID-19. I think it was just a couple of cents a share. So I haven't repurchased that. Also, with the markets going up, gold has fallen a little bit out of favor because the risk profile has kind of been reduced with the markets going up. And we can see gold, get that up here. So I had gold in this pitchfork here. We got up, like we were approaching the 1800 level, and now we've kind of fallen down to 1691. So we've had a bit of a correction in gold. I do expect gold to rally again, and I might look at some other gold plays that may be a little bit better than Centerra Gold, that have maybe possible better earnings profile in the future. Also, so I did add Infosys. It's an Indian company. The symbol is INFY, and I've had this one several times in the past. Over the last probably 20 years, I've traded kind of in and out of it. It's operates in India. It's one of the largest IT players in the country, and it was up around $12, came down to $7. I ended up buying in around $9 here. And there's a chance over the next couple of years it could move back up in the $12, $13 range. And it does pay not a bad dividend. So, but I just bought a small amount of that, and I'll wait like I normally do another month or so and decide if I want to add to it. As far as get this up here. So Infosys, just got a small report here. Basically, it's got a 4.5% dividend, which isn't too bad. That dividend has increased over the last 2 decades from like 4 cents, from 5 cents up to about 40 cents where it is today. Earnings have kind of steadily increased. So is its book value, revenues per share, and it grows about 6% or 7% a year. And I like the fact that it has absolutely no debt. As I've talked about in previous videos, if the markets turn around and head south again and the risk is back on, and I think there's going to be a lot of defaults in the bond market, and I think yields, even though the Fed's kind of going in and buying everything, corporate debt, the only thing they aren't allowed to do is buy shares. But I think if the market does really tank again, there's going to be a lot of pressure on Congress in the States for them to start actually outright buying shares like they do in Japan, and they do that to ETFs. If they do that, then, as I've said before, the United States will basically be a socialist country, and the consequences of that. And going back to Infosys, it's like I say, they have customers around the world. The revenues this year are going to be about 13 billion. And kind of what they do is they leverage the India